Assalamualaikum warahmatullahi wabarakatuh. Hello, in this section we are going to learn about the financial reports of Islamic financial institution and the analysis of the financial report of Islamic banks. Of course, I also encourage you to find other resources to enrich your knowledge. Financial statements are written reports created by a company's management to summarize the business financial condition over a certain period, quarter or 6 monthly or yearly. These statements, which comprise the balance sheet, income statement, cash flow statement, and statement of shareholders' equity, must be prepared by specific and standardized accounting standards to ensure that reporting is consistent. The objective of the financial reports are to give information about the performance and activities of the company. The report can be the basis for the users to make economic decisions. The reports can minimize the asymmetric information between the management and the principals. GAAP in 2000 added a social welfare in the objective of the financial reports. This is very in line with Islamic principles that an organization has a function of bringing maslahah or better life in the social welfare, even not just social welfare but also the environment. In Islam, financial reports are the process of identifying, measuring, and communicating economic and other relevant information inspired by Islamic worldview and comply with Sharia Islamiyah to permit informed judgments and decisions by potential and expected users to enhance social welfare. In other words, financial reports give information to make decisions, to comply to Sharia, and to contribute to social welfare. What financial statements should a bank produce then? There are a variety of financial reports in Islamic bank. We can classify them into 3 categories. The first category is the reports for commercial activities that also exist in conventional banks. The second, the statement for social activities, i.e. statement for zakat and social funds. And the third is other reports, which are reconciliation of revenues and profit sharing, and notes to financial statement. The users of the financial statements are principally the external parties, such as investors or shareholders, debt holders, suppliers, government, customers, employees, and society. If we look at the function of financial statement are stewardship function and decision making. Stewardship function is the function of responsibility. We know that the management are appointed to manage the company as the agent of the principal. Hence, management should responsible and prove that they did their job according to the interests of the principals, as the evaluation for the history performance, of course. The second, the financial reports have a decision-making function. This function is now getting stronger and stronger. The financial report should be able to give information for the users to make their decision. This function has a future-oriented. Investors invested their wealth for some expected returns in the future. So, this is a future-oriented, not the past. Generally, there are 4 objectives of the financial reports. 1. To improve the compliance of the Sharia in all transactions and business activities. 2. To inform the compliance of the entity on the Sharia principles. 3. To give information for the return on the investment and the information related to the obligation of the social function of the entity. And 4th, to give information to evaluate the responsibility in managing investment funds with a good investment. Let's see the first report, Statements of Financial Position. It consists of assets, liabilities, temporary circa fund, and equity. So the new item here is there is a temporary circa funds that does not exist in conventional banks. Temporary Shirkah funds is funds that the company received from investors for a particular and contemporary investment. It is usually to show the mudharabah and musyarakah funds from the investors. We can get many information from this statement. It allows us to make prediction and estimate the potential of the company in the future. Liquidity, economic resources that will create revenues and expenses, composition of assets that represent the strength and the weakness of the company, the composition of resources of income, sales, fee-based and profit sharing, the strength to face the macroeconomic condition, potential cash flows, liabilities or cash outflow potential, and capital structure and risk. Another important financial report is profit and loss statement. This report shows the revenues as well as expenses, and the more important is that we can see the classification of the revenues and expenses, which is the main activities and the other or supporting activities. From this report, we can evaluate the management achievement in managing the company, the profitability, and the efficiency of the company and the operational activities. Cash flow statements. Next is the cash flows statement. We can see that this report consists of three components: cash flow from operating activities, investing activities, and financing activities. By analyzing this report, we can evaluate how the management managed cash and analyze the achievement of three resources of funds: operating, investing, and financing activities. Operating activities is the activities that is related to daily operational. And investing activities are activities that is related to investing in fixed asset or in financial asset. While financial activities is the activities to gather cash or funds, or capital from outside. The last one is statement of owner's equity. This report shows the changes in invested capital, other comprehensive income, retained earnings, treasury stock, and minority interest. This statement is about the capital or the equity of the owners. Okay, I think this is all for today. Have a good day. Assalamualaikum warahmatullahi wabarakatuh.